My name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. The significance of the second bullish white soldier made on Tuesday was not lost on the market. Not only did it punch up that day through the February high at 122.42 and make the fourth highest close of the year, but it also closed over the two downtrends. That's the 2008 to date move, currently at 122.34, and a 2011 to date move, currently 122.45, if only just on the latter. As I said yesterday, I suspected the closes over the downtrends were the most important of all that jumble of action. And then the reactionary move lower made yesterday of a bearish engulfing pattern, almost a key reversal down, was a suitable riposte to that tentative bullish move over the downtrends. We'll now see whether this was a knee-jerk move lower or a proper rejection of the bullish incentive. Overall, what initially looked like it might be a bull flag type formation over recent weeks, then a possible unusual broadening formation, right angle and ascending, well, maybe now further morphing into a bull channel, currently 121.67 to 123.48. For the moment, I will still keep the provisional target X for the bull flag above in the 124.35 area. But as you can see, there's been and still is lots in the way on the journey up there. And so far today, a cautionary further dip lower towards the lower bull channel line, but then a pull back up. And looking like an indecisive doji cross right now. Below the bull channel line, we have the March 2018 low at 121.52 as the next support. Cable, aka sterling against the US dollar. Finally, a day without indecision yesterday, a bearish black crow that closed below the second of the trio of overhead resistances, originally of 140.75, 141.43 and 142.43. In this case it was the congestion at 141.43 that is now once again resistance. Now, whilst this is no longer evidence of the recent intraday indecision I've noted in the market, it still shows how in the current bullish forces evident since September of last year, well, have battled and rubbed up against the latest challenge seen overhead, this trio of overhead resistances I've already previously mentioned. We are still tantalizingly close to the preliminary target X in the 142.45 area for the double bottom pattern above, formed since mid-March. A full target X1 for the patterns in the 143.30 area. Overall, the market continues to travel between the lower time below, currently 138.76, together with its long-term partner, the medium moving average, currently 138.66, whilst above we have the middle time, currently at 143.36. Both times are from the June-September 2020 bullish pitchfork. Now, as I've said already, please remember, this pitchfork has given the bullish angle attack of this market since September of last year. As a quick postscript, this latest move up can be traced back to the weekly key reversal up made 3 weeks ago. So far today, a further small dip down towards the key 140.75 congestion, but holding off testing it properly as yet, and unfortunately looking as if we might have an indecisive doji cross right now. Euro against sterling. A bearish dark cloud cover pattern yesterday, halting the move higher that we've seen this week. Now, some might say it was the influence of the April 2020 low at 86.69 that halted the move up in the previous session's try higher and contributed to yesterday's pullback. I would agree with that, but as I pointed out in yesterday's commentary, we had and have the rapidly descending medium moving average, currently at 86.79, not only entering the frame from above but about to hit the market, and I think it was this that really triggered the move back down. Below we have the ever-present rising short-medium moving average, currently at 86.21, which has, and I suppose still is, providing support to this market. Now overall, I've spoken for a while now about a new, smaller pattern emerging, a possible small bear flag pattern over the last 2 weeks. Nothing is for certain as yet, and yesterday's action, even as bearish as it was, did not really help that much. However, I still think it is worth considering, because we now have the descending medium moving average directly influencing the market, and that is worth thinking about. Now, so far today, a small reactionary move back up as prices got a little too close to the short medium moving average below, and unfortunately looking a little bit like an indecisive doji cross at this moment. US dollar against the Indian rupee. Hammer pattern yesterday, usually seen as bullish some 6 out of 10 times, though this one is not a big one. It was still a new recent low, closing finally below the 2018 to date uptrend, currently at 72.77, and testing but really failing to breach the next key support, and that's the 50% Fibonacci line on the July 2019 to April 2020 move at 72.64. As I've repeatedly mentioned, this 50% line, Fibonacci line, is the gateway to a congestion zone down to the February 2020 high at 72.05. So far today, a lower open that filled its space by reaching up to the underside of the broken uptrend before trying back down and really testing the 50% Fibonacci line at 72.64. Underneath that we have the 2020 today uptrend currently at 72.51 and the September 2019 high congestion at 72.41. US dollar against the Brazilian real. This indecision is getting silly now. A fifth countering bearish double yesterday as the general uncertainty that infests this market over the last 2 weeks reasserts itself. The lesser recent 38.2% Fibonacci line at 534.15, the lesser one I should point out, was the cause of the overhead resistance this time, though the declining short moving average currently at 530.02 did provide support, if only on a closing basis. Meanwhile, the potential still exists for a possible bear flag formation, as staying below and closing below this lesser recent 38.2% Fibonacci line seems to still give credence to the idea. I will still keep, for the moment at least, target X1 below, possible full target for the recent sideways triangle at 513.80. Further overhead though, we still have a trio of resistances, the recent 50% Fibonacci line at 544.41, the medium moving average at 547.34 currently, and the long moving average currently at 543.68, though they are separating and thus reducing their overall combined power. US dollar against the Mexican peso. A fourth countering bearish harami yesterday, if only just. The market continues to exhibit intraday indecision as the market carries on being gently squeezed between the overhead flatlining short moving average currently at 1994.24 with the help of the nearby neckline currently at 20.0504 of the late February to early April head and shoulders top, whilst below we have the significant support congestion at 1971.68. I've still kept further down on the daily chart the potential targets from this earlier head and shoulders top and one from the mid-January to late March one. In the first case we have initial target X1 in the 19.5 area with full target X2 down in the 1885.5 area. In the second case we have an initial target X3 in the 1971.70 area, full target X4 down in the 19 even area. Now please note the initial target X3 here has already been achieved. I've chosen to keep these on here just in case. So far today, really a move within yesterday's range, but seemingly a tendency right now to head and test lower, though it is looking more towards an indecisive spinning top or doji cross right now, to be honest. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.